Well, here we are with the midweek report, and man, there's so much news. I don't know if we're going to be able to cover it all in really the kind of detail I'd like to, but let me at least take a shot at it. And this is Randy Kirk. You know what to do if you like this kind of content, if it's helpful. I'm not a financial advisor. This is for your entertainment purposes only, based on the observations of a guy who's been following recessionary activity almost my entire adult life. So like, subscribe, and all that jazz. You may want to look earlier today. I did the first of the competitive videos. We did it on Toyota. Great conversation with Lars Strandritter about Toyota. Lars is from Best in Tesla, really super YouTuber who follows the details of the various automotive companies and the cars themselves. And so I think you'll really enjoy that video. Check it out from earlier today. Okay, let's start with the chairman, the Fed chairman. If you follow my financial observations about the macro, about the economy, you know that I think that the Federal Reserve is probably making a mistake here, but I'm not 100% sure how to fix it. I'm just saying. Chairman Powell came out again yesterday and suggested that he may have to raise rates higher and faster than what they've been suggesting that they're going to do. The market seemed to absorb that fairly well. In fact, 10-year bonds went down yesterday afternoon. It's kind of hard to see exactly how the market is taking the fact that this could happen. But obviously, if interest rates continue up, that is costing companies more to borrow. So what are they going to do with that additional borrowing expense? Well, they try to put it into the cost. They try to charge us more for their products and services. Now, there's a limit to how much that can happen. And so at some point, sales start to be affected because supply and demand still works. And as the sales are affected, then you cut margins, and and as you cut margins, you hope that your sales maintain, but maybe they don't. And that's kind of the cycle that I think the Fed chairman would like to see, is that companies would see their sales go down, they would cut their margins, they would therefore have fewer profits, they would start to look for ways to cut costs. And then one of the ways they're going to cut costs is to cut employees. And this is happening to some extent in tech, but it isn't happening very much overall. And so this morning, for example, every single indicator in terms of employment that came out this morning suggests that people are still hiring rapidly. People are a little more reluctant to quit. There's a report that's tells how many people are quitting as opposed to being laid off or fired, and a bit fewer people are quitting, which would suggest that maybe they're a little more satisfied in their position, or at least less satisfied that they can increase their opportunity by quitting and finding something else. So I would expect this to be taking place to some extent, that people would have changed jobs frequently enough now. They've changed job once or twice or three times over the last 5 years, and hopefully they found a place they'd like to work. Because at some point, most people would like to stay at a company for years and years and not be jumping around all over the place. It's not good for your resume. It's probably not good for your general overall emotional health. So you would expect that to start to happen, and there was some evidence that was happening. But what didn't happen was we're not seeing a reduction in the number of jobs available. And so with still sitting at 1.9 jobs available for every one person looking, and this is just historically crazy and doesn't suggest that there's any short-term potential for the labor market to shrink. I think the labor market's going to continue to grow. More people are going to come in from the sidelines because there's great jobs available. And we're going to continue to see these low unemployment numbers, and we're going to still continue to see some upward pressure on wages. I just don't know how much you'd have to kill the economy, how much Powell will have to destroy the economy in order to get us to a place where there's even a 1-for-1 ratio of people looking for jobs available. And you really need it to be the opposite. You need it to be fewer jobs available than people looking in order to really impact wages. Now, there could be some impact on wages, just again, from the standpoint of companies saying, look, we're not going to give you a 6% increase just for an inflationary adjustment. And there's certainly some of that taking place where companies are not doing that. But I don't know if it's enough overall. Anyway, that is the dilemma that we're in. As we also see, as these interest rates go up, the government is paying more and more and more money for their money. And the result is that's going to impact the overall deficit, which then the higher the deficit is, the more interest you have to pay on that additional borrowing. So this is a problem. And I'm not sure what the solution is. I wish I could say to the Fed, hey, here's a great idea for you. Why don't you try this? The one idea I have been talking about, you've probably, maybe if you've been watching me, you know that this is what I believe. I do think Canada, who decided to pause their interest rate increases today, could be on the right track. It may be that the Fed needs to pause, because a lot of this inflation and a lot of what's going on has to do with this boom bust and all the shortages that were caused by the war in Ukraine and by the COVID situation and by the folks going out and not having anywhere to spend their money and saving so much. But that's unwinding. So I'm not sure that maybe the Fed should take a pause just to see what happens. I don't think that it's going to hurt that much. I think there may be a greater potential harm by continuing to increase compared to the potential harm that might be caused by pausing. So I think that would be, if I was a Fed pres right now, I think that's how I'd be voting, would be for a pause. Give it 90 days. Let's see what happens over 90 days. A lot of prices have come down. A lot of commodities are down. Freight costs are down. Container costs are down. A lot of individual commodities are lower. Even lithium, we talked about that the other day. So give it a pause and see what happens, because here's another aspect of this macro that I don't know if people are paying attention to this or not, but they should be. And that is all that all that saving that we Americans were doing during the pandemic and for about a year after the height of the pandemic, that's gone. The savings is no longer happening. And in fact, the opposite is happening. People are borrowing like crazy. And they're borrowing because I think the inflation has impacted their expectations of what their budget needs to be. And so if you're spending, my wife went to the market the other day, we had actually 2 bags of groceries, was almost $100. So it may be that a lot of folks are going to the grocery store and coming home and going, okay, the budget is $600 a month or $800 a month, and we're spending $1,000 a month. And where's that going to come from? The electric bill or the gas bill might be higher. Those are a couple that are still being impacted as we are in winter. So people are borrowing, record high total credit card borrowing. The beginnings of some people not being able to pay for their cars and some repos happening in the car industry. This has been predicted. Some people are saying it will be the next major recessionary factor. I still don't see that. I think maybe it'll happen, but I don't see it. Okay, so that's the macro. So in that macro environment and seeing the stock market go down, fairly radically the last few weeks, then we take a look at Tesla. Well, it seems like, when the macro is off, then risk is off. There is no benefit at all to any good news, and any bad news impacts the stock in a major way. So 2 steering wheels fell off of some Tesla Model Ys. And so that is a headline. If two steering wheels fell off a Volkswagen, it wouldn't be a headline, but it's a Tesla, so it's a headline. And so that impacted the stock this morning. I'm quite confident of it, because in the meantime, FSD, full self-driving, version 11.3.1 finally dropped today, and the news seems to be pretty good about it. So far, the videos I've seen suggest that the new version is operating pretty well. Does that mean it's perfect yet? No, it is definitely not. But it's better, and that might suggest that there should be a little pop, but not in this environment. Elon Musk made some comment about a Twitter employee. The stock gets slammed, maybe because Elon Musk was out of line. He's apologized since, and apparently that fella is happy and going to continue to work at Twitter, and all's it well that ends well, except it's just one more, way that the folks that are negative on Tesla can pound away in terms of the news. And of course, the news on these steering wheels, the headlines, I should have copied them down and put them up. Tesla steering wheels fall off. That's the headline. That's not what happened. You want to make a headline? 2 Tesla Model Y steering wheels fell off. And so there's a concern, and people are going to take a look at this. A couple of, the recall last week in terms of some bolts not being correctly 100% tightened on some safety, whatever you call those stupid things. So a couple of bolts, a couple of steering wheels. Yeah, we don't want this. This is not good news. But if it was any other car company, these would not be headlines. So we are now down significantly for a couple of 3 days. Tesla stock has not been doing well. Opportunity, at least for some of us, this is an opportunity to buy more. Who knows when it turns? Could we see a repeat of last year where we go back down to the 100 level? It would be nuts. Take a look at my video from yesterday, where I think I made a fairly strong, in fact, I think I made an amazingly strong case that energy alone should be $100 for the stock. The charging stations alone should be $50 for the stock. And the coming Optimus should be worth millions, billions for the stock. And the semi-truck and Cybertruck, just go down the line. Each one of them in their own right should be worth $100 billion in valuation, $200 billion in valuation, and yet the stock overall is only pricing in the cars, only the automotive division, not even counting the Cybertruck, the semi, or any of these other things that are actually either already in profits or just about to start going into production with profits. So there you are. There is the midweek report. We've got some definite bad news in the press about Tesla. We've got some definite not so great news with regard to the economy. Well, that's not true. The economy is doing great, but the Fed doesn't like it. And so the Fed is trying their best to destroy the economy, and that is causing the stock market to go down. So we got the stock market down and bad news in Tesla. But even that's not true, because overall the news for Tesla is unbelievably good in comparison to a couple of steering wheels falling off Model Ys. Well, guys, that's all I got for you today. I think the stock should be going crazy. I think the stock market should be going up. I think the Fed should be pausing. Those are just my opinions. What do you think? Tell me in the comments what you think. And then like this if you think that there was anything of value that I said in the last 20 minutes. And this is Randy Kirk, and it's been great talking to you today.